When you walk into any coffee shop, restaurant, or retail store, you'll notice something fascinating about the people around you. Look closely at their behavior, the way they order, the way they spend, the way they talk about money. Without realizing it, you're witnessing a live demonstration of why some people quietly build wealth while others remain stuck in the same financial loop for years. The truth is uncomfortable, but undeniable. Most people are living paycheck to paycheck, and it's not because they don't make enough. The data is shocking. When researchers asked Americans if they could handle a $400 emergency, 1 in 3 said they couldn't. $400. That's less than what many people spend each month on car payments or subscription services. Yet for millions, that small amount represents a full-blown financial crisis. What's even more surprising is that this problem isn't limited to people earning minimum wage or working in traditionally low-paying jobs. It cuts across professions, income levels, and education backgrounds. From college graduates with good salaries to middle-class professionals, financial fragility is everywhere. And here's the thing. Being broke isn't just about how much money flows into your account. It's about what happens after it arrives. You've probably met people earning 6 figures who are constantly under pressure, and others making half as much who seem perfectly calm, secure, and content. So what separates them? It's not luck, it's not inheritance, it's not even opportunity. It's the daily financial choices that quietly shape a person's future, decisions that build habits, and habits that build destiny. Most people don't even realize they're stuck in a pattern that keeps them broke. They blame the economy, their job, their timing, or just bad luck. But the real reasons are far simpler, and they're hiding in plain sight. Today, we're going to explore those reasons, the silent mistakes that keep people trapped in financial mediocrity. More importantly, we'll uncover how to break free from them. Some of what you're about to hear may surprise you because it's not the typical advice financial experts repeat. And some of it might even make you a little uncomfortable because you'll recognize these patterns in your own life. But awareness is power. Once you can see the pattern, you can change it. Let's start with the first and most fundamental reason people stay broke. They live without direction. Think about it this way. If you were planning a cross-country road trip, would you just get into your car, start driving, and hope that somehow, someday, you'd reach your destination? Of course not. You'd plan your route, check your map, estimate your stops, and have at least some idea of where you were going. Yet when it comes to money, something far more important than a road trip, most people operate without a destination. They earn money, they spend it, maybe they save a little, but there's no defined endpoint, no vision, no target. When you don't know where you're going, every decision feels random. Should you buy that new gadget or put the money towards savings? Should you take extra work this weekend or rest and relax? Without a clear financial goal, those questions have no real answer because there's no framework guiding them. Financial direction changes everything. When someone sets a goal, like paying off debt within 2 years or saving for a down payment on a house, every decision starts to align with that objective. Instead of asking, "Can I afford this?" they ask, "Does this bring me closer to my goal?" That single shift in thinking changes how they view every dollar. People who drift financially rarely realize they're doing it. They assume they'll figure it out later, but later often turns into decades. The absence of direction doesn't just delay progress, it guarantees struggle. Because without targets, there's no progress to measure, no motivation to keep going, and no structure to protect your future self. On this channel, Mike Compound, we believe financial peace isn't about having millions in the bank. It's about control. It's about knowing where your money is going, why it's going there, and how each decision fits into a larger plan. The road to financial freedom doesn't begin with a pay raise, a new job, or a lucky investment. It begins with clarity. Knowing exactly what you want your money to do for you. Once you set that direction, every other piece starts to fall into place. Because money isn't just about numbers, it's about behavior, psychology, and purpose. And until you define that purpose, you'll always feel like you're moving, but never truly getting anywhere. So if you've ever felt like your finances are running you instead of the other way around, this is where it starts to change. The moment you decide where you're going is the moment you stop drifting and start building. That's the first truth behind why most people stay broke. The second major reason most people remain broke is their complete lack of preparation for life's inevitable surprises. Remember that shocking statistic about how 1/3 of Americans can't cover a $400 emergency? That number doesn't just reflect bad luck, it exposes a deep misunderstanding about how life really works. Unexpected expenses aren't really unexpected. Cars break down, appliances stop working, medical bills arrive, and jobs change. These things aren't rare, they're part of life. Yet most people behave as if these events are unimaginable. So when they happen, they're forced to react instead of being ready. And when you're unprepared, every small problem turns into a crisis. A sudden car repair, out comes the credit card. A medical copay, borrow from family. A broken phone, finance a new one. Each short-term fix comes with long-term consequences, interest payments, new debt, or more financial stress. The result is a cycle where small surprises snowball into large setbacks, keeping people stuck in survival mode. Building even a modest emergency fund breaks that cycle. It doesn't have to start big. A few $100s set aside can mean the difference between calm and panic. Over time, that fund becomes your personal safety net. It protects you from the chaos that derails so many financial plans before they ever start. But preparation alone isn't enough. The third major reason people stay broke is simple but deadly. They live without a plan for their money. Think about it. No successful business operates without tracking income and expenses. Yet millions of people treat their personal finances like a guessing game. They know roughly what they earn. They have a vague idea of their bills, but they couldn't tell you exactly where their money went last month. This lack of awareness creates one of the most common financial mysteries, the disappearing paycheck. You get paid, you buy what feels necessary, and suddenly, it's gone. You can't even remember what you bought. The truth is, small, unconscious spending decisions compound faster than most people realize. A $5 coffee, a $15 takeout order, a few forgotten subscriptions. None of these seem like a big deal in isolation. But over months, they quietly drain hundreds, even thousands of dollars that could have been building your wealth instead. Having a spending plan doesn't mean restricting joy or tracking every penny obsessively. It simply means being intentional. When you know where your money is going, you control it. When you don't, it controls you. And here's the irony. Most people resist budgeting because they think it will make them feel limited. In reality, it does the opposite. A good plan gives you freedom because you know what's safe to spend, what's being saved, and what's being built for your future. Financial clarity doesn't just protect your money, it changes your mindset. When you become aware of your spending patterns, you start seeing connections between your habits and your outcomes. You begin to notice how small adjustments, cooking at home, canceling unused subscriptions, delaying impulse purchases, can shift your entire financial trajectory. It's in that awareness where financial growth begins. And yet, even with awareness, another force often keeps people broke, living entirely in the present moment. Life is short, people say. You can't take money with you. That's true. But it's also the perfect excuse for short-term thinking. Enjoying the moment isn't wrong. But when the present completely overshadows the future, financial problems are inevitable. People spend as if tomorrow doesn't exist, as if their future selves aren't real. They tell themselves they'll figure it out later, forgetting that later always arrives, and it always demands payment. This isn't about denying yourself life's pleasures, it's about balance. The happiest, wealthiest people aren't the ones who hoard every dollar. They're the ones who know which moments are worth spending for and which ones aren't. They understand that discipline today is what makes tomorrow secure and enjoyable. Because the truth is, financial peace isn't built through perfection, it's built through preparation and awareness. And here's where Mike Compound stands apart. On this channel, we believe money isn't just about making more. It's about mastering what you already have. It's about realizing that small, consistent improvements in how you save, plan, and prepare can completely transform your life. Once you stop seeing budgeting as a burden and start seeing it as a tool, your entire relationship with money changes. You stop chasing quick fixes and start building real foundations. You stop fearing surprises and start anticipating them. Preparation gives you confidence. A plan gives you clarity, and together they give you control, something most people never truly experience with their money. So before you blame your job, the economy, or luck, look at your structure. Because the truth is, no one becomes wealthy by accident. Wealth is built by design. The next reason people remain broke isn't just financial, it's psychological. It's about the mindset that silently dictates how we use money, often without us even noticing. Many people live entirely for the present. They chase the thrill of Instant gratification because it feels rewarding now, while the future feels distant and abstract. The phrase, "you only live once," becomes a justification for impulsive spending. And sure, there's truth to that. Life is short. But the problem begins when living for today means stealing from tomorrow. When you make decisions without considering your future self, every dollar spent becomes a lost opportunity. The pair of sneakers that looked good for a week, the fancy dinner that faded into memory after a few hours, the spontaneous trip that left a credit card balance for months. These aren't harmless indulgences. They're small leaks that sink the ship of financial freedom. This pattern isn't about greed or stupidity. It's about emotion. Humans are wired to seek immediate pleasure and avoid long-term effort. But wealth is the opposite of that instinct. Building wealth requires patience, delayed gratification, and a willingness to say, "not yet," more often than, "why not?" And that's what separates the financially free from the financially fragile. Then come the expensive habits, the ones that don't feel expensive at all. We often imagine that financial destruction comes from major mistakes, but most of it comes from the small ones repeated daily. Take something simple, like smoking a pack of cigarettes every day. At roughly $250 a month, that's $3,000 a year, $30,000 over a decade, not even counting the compound interest that money could have earned if invested instead. Or the person who eats out for lunch every day and orders dinner out a few times per week. It feels normal, even deserved. But when you calculate it, those normal choices can easily total $500 to $800 a month. Over time, that's enough to fund a down payment on a house, start an investment portfolio, or build the financial cushion most people claim they can't afford. And that's the irony. People often say, "I can't afford to invest," while simultaneously funding a dozen habits that destroy their financial potential. Every habit has a price. Some pay you back, others rob you quietly. But one of the most damaging patterns isn't just what people buy, it's how they buy it. That brings us to the next trap. Destructive debt. Not all debt is bad. Used strategically, debt can accelerate wealth. A mortgage on a rental property, a loan to start a business, or student loans for high-value education can create long-term returns far greater than the cost of borrowing. That's productive debt. But destructive debt, that's the silent killer. It's borrowing money to buy things that lose value instantly. Credit card vacations, luxury cars that depreciate faster than you can pay them off, financed gadgets that will be outdated in a year. These purchases give short bursts of satisfaction while chaining you to years of repayment. And the worst part? Many people don't just borrow for pleasure. They borrow to maintain an illusion. They stretch their budgets thin to appear successful, to fit into a lifestyle they can't afford, driven by the belief that looking rich will somehow make them rich. It's the paradox of modern finance. People go broke trying to look wealthy. Meanwhile, the truly wealthy often do the opposite. They drive older cars, wear simple clothes, and live in homes chosen for comfort, not for show. They know every dollar spent to impress others is a dollar stolen from their future freedom. When you stop caring how others perceive your financial life, you take back control of it. On Mike Compound, we talk about this often because the biggest financial trap isn't external. It's internal. It's the story we tell ourselves about money, success, and self-worth. The truth is, money magnifies who you are. If you use it to impress others, it disappears. If you use it to build your future, it compounds. So here's the hard question. Are your financial decisions driven by your goals or by your desire to be seen a certain way? Breaking free from that illusion is where financial transformation truly begins. Because once you stop spending to impress, you start spending to progress, and that shift changes everything. Your habits define your wealth. Your mindset defines your habits. And your willingness to see through these psychological traps defines your future. Most people never realize this until it's too late, but you don't have to be one of them. The next reason most people stay broke reveals something subtle but powerful. They prioritize their money backward. Most people pay everyone else first and themselves last. Here's how it usually goes. The paycheck arrives, and immediately it's spent on rent, bills, groceries, gas, and everything in between. And if by some miracle there's a little left over at the end of the month, then they save or invest. The problem? There's almost never anything left. Life expands to fill your income. The more you earn, the more you find to spend on. And when your financial future is always treated as whatever's left, it gets pushed further and further out of reach. Wealthy people understand something simple but life-changing. You pay yourself first. That means before paying bills, before buying groceries, before even thinking about discretionary spending, a fixed amount goes straight to your savings and investments. It's not optional. It's not a leftover. It's a bill, but one you pay to your future self. This approach forces discipline in a way nothing else does. Once your savings are automatically set aside, you're forced to live on what remains. And that's where real creativity and control emerge. You start noticing unnecessary expenses, making smarter trade-offs, and living more intentionally. This single mindset shift, paying yourself first, is one of the most reliable paths to financial freedom. Because wealth isn't built by chance, it's built by habit. But there's another major reason people stay broke: fear. While some individuals are reckless with their money, others are so terrified of losing it that they never allow it to grow. They see risk everywhere, in the stock market, in real estate, in business. So they do nothing. They park their money in low-interest savings accounts, where inflation silently eats away its value year after year. The irony is that in trying to avoid risk, they're taking the biggest risk of all, the risk of staying stagnant while everything around them gets more expensive. You see, there's no such thing as a life without risk. The question is, which risk are you choosing? You can risk losing a little by investing, or you can risk losing everything slowly to inflation and missed opportunities. Wealthy individuals understand that risk isn't something to fear, it's something to manage. They study before investing, they diversify, they think long-term. They take calculated risks that offer potential growth while protecting themselves from catastrophic loss. But the average person never develops this mindset because of one dangerous illusion, that safety lies in doing nothing. In reality, doing nothing is what keeps people financially trapped. Because no matter how hard you work, you can't save your way to wealth if your money isn't growing. And that brings us to another critical truth. Most people rely on just one source of income. They work their job, collect their paycheck, and assume that's how money is made. But trading time for dollars has a ceiling. There are only 24 hours in a day. If your only source of income depends on your physical presence, you've already limited your financial potential. The wealthy see money differently. They see it as a worker, something that can be multiplied. They build systems that earn for them: rental properties, dividend-paying stocks, online businesses, royalties, or side hustles that operate even while they sleep. The goal isn't to work endlessly, it's to make money that works endlessly. And yes, building multiple income streams takes time. It takes sacrifice. It might mean working evenings after your main job or living below your means for a few years to invest. But those temporary sacrifices create permanent freedom. Because every additional stream of income is more than just extra money. It's a layer of security. It means that if one source dries up, your life doesn't collapse. It means your financial stability no longer depends on a single paycheck or a single boss. Wealth isn't about having more. It's about having options. Options to take risks. Options to say no. Options to design your life instead of reacting to it. When you depend on only one source of income, you're always one layoff, one accident, or one bad month away from disaster. But when your money earns while you rest, you gain the freedom to make decisions from a place of strength, not fear. So stop thinking of money as something you chase. Start seeing it as something you build, something you train to work for you. Because the truth is, every dollar you earn can either be spent, saved, or deployed to create more dollars. And that choice, made consistently, determines everything. The final reason most people stay broke is simple, yet it might be the most powerful of all. They stop learning about money. For many, financial education ends the moment they leave school. But schools rarely teach real-world finance. They teach you how to earn money, not how to manage it. So people enter adulthood understanding algebra and world history, but not compound interest, tax strategy, or how to make their money grow. And that lack of knowledge quietly drains their future. Most people think financial education is a one-time lesson, but in reality, it's a lifelong skill. The world changes, markets evolve, tax laws shift, new opportunities appear. And if you're not updating your knowledge, you're playing a game that's constantly changing without learning the new rules. Someone who learned how to budget 20 years ago but never learned about investing might be losing thousands each year to inflation. Someone who doesn't understand how taxes affect their income might be giving away money they could have kept. And someone who avoids learning about investing might fall for the first person who sounds confident, whether that's a friend with a hot tip or a scammer promising quick returns. Ignorance is expensive, far more expensive than education ever will be. Because when you don't understand how money works, you become vulnerable to anyone who does. You'll buy into bad advice, high-interest loans, too-good-to-be-true deals, and products designed to take advantage of your inexperience. Wealthy people aren't necessarily smarter. They're simply more informed. They read, they ask questions, they learn from mistakes, theirs and others. That's why financial education is a non-negotiable part of building wealth. You don't need a finance degree or a Wall Street background. You just need curiosity. The same curiosity that brought you here to Mike Compound. Because on this channel, we believe financial growth begins with understanding. The more you understand, the better choices you make. And those choices compound, just like your money can. Now here's the beautiful part of this entire journey. None of the wealth-destroying behaviors we've talked about are permanent. Every single one can be reversed, starting today. You don't need to overhaul your entire life overnight. You just need to start making slightly better decisions, consistently. If you've been drifting without a clear goal, start by writing one down. Be specific. Instead of saying, I want to save more, say, I'll save $15,000 within 18 months. Instead of, I'll pay off debt someday, say, I'll eliminate all credit card balances within 2 years. That clarity transforms your decisions. Every time you're tempted to spend impulsively, you'll have a standard to measure it against. Does this bring me closer to my goal or further away from it? If you don't have an emergency fund, start one today. Even if it's just $50. The amount matters less than the discipline of beginning. Slowly, that fund will grow into your financial safety net, protecting you from the chaos that keeps most people trapped. Track your spending for a month, not to feel guilty, but to gain awareness. Awareness is power. Once you see where your money truly goes, you'll realize that most of what's keeping you broke isn't necessity, it's habit. Next, automate your progress. Set up an automatic transfer from your checking account to your investments or savings the moment you get paid. Treat it like a non-negotiable expense, because the truth is, wealth isn't built by willpower. It's built by systems that make good decisions automatic. Then, focus on expansion. Build skills that increase your earning power. Create side hustles. Learn about investments that fit your risk level. The goal isn't to get rich overnight. It's to build momentum that never stops. And through all of this, keep learning. Read books. Watch financial creators who educate, not just entertain. Follow people who've built what you want and study how they think. Because the biggest difference between the rich and the poor isn't income, it's perspective. The wealthy think in decades, the broke think in paychecks. The wealthy see money as a tool, the broke see it as a lifeline. The wealthy plan for tomorrow, the broke react to today. If you change your mindset, you change your outcomes. Remember, wealth doesn't require luck, it requires consistency. It's not built through massive windfalls. It's built through small, repeated, intentional decisions that compound over time. Your financial future isn't defined by your past mistakes or your current situation. It's defined by what you do next, by the moment you decide to take control. You can break the cycle. You can build real security. You can stop living in reaction and start living by design. And when you do, you'll realize something powerful. Money doesn't buy happiness, but it buys freedom. The freedom to choose how you live, how you work, and what your time is worth. That's what this channel, Mike Compound, is all about, helping you take those steps toward freedom, one smart choice at a time. Because the question isn't whether these principles work. The question is, will you start applying them today?